So welcome to Finance One, cracking the formula, the independent film financing in today's financial landscape. I'd like to thank our sponsors, Film Hawaii and Rapbook. And we're going to just show you a quick video from Rapbook, and then I'm going to introduce Ryan Broussard from Rapbook. Wonderful. So Rapbook has been a partner of ours for a number of years, and they also do webinars. So you might want to check out some of the finance webinars we've done. You can find that on the AFM website and also on the IFTA website. Just to say a few words about Ryan, he's also been on some of our panels in the past and has spoken on our webinars as well. He's the VP of Sales and Production Incentives and has worked with productions of all sizes, from the largest studio features to the smallest independent projects, to help them to optimize their production incentive strategies and to make the most of their budgets. So Ryan combines his industry-leading expertise with an emphasis on client services. He has helped clients budget their projects to ensure production incentives are applied correctly, and he has worked directly with clients' financial institutions to help productions secure financing using incentives. He maintains active relationships with every major film office in the country. As a well-regarded industry expert, Ryan has hosted numerous online tutorials, webinars, and educational videos, and he has served as both guest and host numerous panels and events for leading industry festivals like South by Southwest, AFM, NPACT, and more. Ryan.
Thanks, Robin. Well, I'm glad you said that because that would be a mouthful for me. I can't even remember all that. Thank you. I'm Ryan Broussard, VP of Sales and Production Incentives at Rapbook. We are very proud and happy to be a sponsor of AFM and this finance panel. Speaking of finance, I'm sure part of this panel will talk about how important the back end of things is with your projects. So the accounting, the numbers, the payroll, and that's why you should work with someone like Rapbook. So Rapbook is the next standard when it comes to production finance and accounting. We understand that the industry is changing and reshuffling, which I'm sure will be talked about today. And you're asking to do more with less and doing it with archaic payroll and accounting systems. Rapbook is the force multiplier when it comes to giving you greater accuracy and efficiency, just overall better output for your finance teams. And we're doing this by giving you greater speed, collaboration amongst your finance teams and crew, giving you more visibility to have better answers with what's going on with your production, and just overall confidence with your payroll system. And we're going to do this because we're built with next-gen technology, and we're engineered on a rapid pace of innovation, and we have a proactive concierge service model. So with that said, please enjoy the finance panel, and please come talk with me or one of my colleagues at the table just outside here after the panel, and enjoy the show. Thank you.
All right, it's my pleasure to introduce Jill Goldsmith, who works for Deadline. Jill joined Deadline in 2019, working as a New York-based contributor. She follows corporate finance deals, publicity-traded companies in media and entertainment, film financing, and New York film and TV production. Over to you, Jill.
Thank you. Hi, everyone. I'm Jill Goldsmith from Deadline, and I'm so happy to be here for, this panel at a kind of pivotal time for independent film again. And, it's called Cracking the Formula. So that's kind of a tall order. There's no secret sauce, but we do have an amazing group of people here who have so much experience and just so much knowledge who will sort of talk through the current state of financing a bit and sort of give you the best direction and advice they can. So I'm going to introduce them all briefly, and then they'll talk more about what they do during the Q&A and conversation. So Miguel Palos, who is the co-founder and chief operating officer of ACG Studios. AGC Studios, dyslexia. AGC Studios, which is a leading player, based London and LA, and in development, financing, production, and licensing of film content and others as well. And then Paula Pazis, from the chief operating officer, of Pressman Films, which is an iconic label that's done, maybe over 100 movies, from Wall Street to American Psycho, and just like really brilliant work. And then George Hamilton from Protagonist Pictures. So that's also as a leading UK sales finance and production company. So thank you all for being here. And we had a fourth who was not able to make it, unfortunately, but we will have a great conversation. So to kick it off, I thought it would be useful if you talked sort of about the landscape today and sort of what we've seen, the stages we've seen since COVID, because that changed everything. And, and then this year is different from last year and from the year before. So kind of discuss that. And I guess some of the things would be, of course, streaming and box office in there. And then a couple of you mentioned when we talked earlier that that financing, the model has gone back maybe a bit now to a more traditional model than it has been in a bit. And I'd love you to talk about that as well. So I don't know, maybe George at the end, would you like to start?
Sure, absolutely. Well, I think picking up almost at the end of your question from there, I think that is since something in the last 2 years, and my fellow panelists can chip in, is I think we've seen a bit of a step back from the tendency of just straight pure equity, full financing, holding back international, holding back domestic, and working towards a festival, which had become, increasingly the norm for many sort of 2 to 10, 12 million dollar film productions, particularly driven by a voracious appetite from the streamers for independent film and content. When that, and it's not just the only factor, but when that appetite has somewhat receded for the worldwide players, that simple one equity or two equity co-fi model has sort of decreased in frequency, and we found a lot. It's, as you say, it's a bit of a return in some ways to the importance of foreign sales has never been, more valued on a project, and often we can be in a scenario where there is, it's market money, it's incentives, it's equity, and possibly even gap as well, sitting on top in a package, and that's certainly been for the last about a year and a half, I would say. I don't know.
Paula and Miguel.
For us as a production company, I think I echo what George is saying. We're really now looking at, we're more focused on foreign sales, but the foreign sales market has shrunk a little bit in terms of the amounts that the buyers will pay. So we then look at our budgets, and we're now trying to fit into a lower size budget, the same level of cast, and that is an interesting equation because we have to make it work. So it's definitely a interesting time for indie film financing. We're focusing on more equity, Whereas in the old days, I've been around a while, so I've seen the ebb and flow of the markets and the climate. And there was a time when there was a formula, some sort of formula with foreign sales. You knew you could go out there and get 60% of your budget, and then you would get a tax credit. You would have a small little gap of some equity, and you would do it, right? My sales company's next to the producer.
Right.
Now, where we have less foreign sales, we have to find more equity. Our gap is wider. So we have to be far more creative in the way we're putting these movies together and try to make them at a budget that makes sense for all the pieces of the puzzle.
If you're not finding 60, what are you finding?
Well, we're certainly not finding 60. Maybe George or Miguel wants to talk about the level of pre-sales.
Sure. I'd say, kind of full circle to answer that question, but go back to the bigger picture of the landscape. I think we became, over the last few years, overly reliant on what the streamers brought, which was an insatiable appetite to just fully finance content. And that was coupled with the shrinking theatrical window, right? And a lot of the foreign sales, traditionally, 10 years ago, 15 years ago, and further, heavily relied on the theatrical marketing campaign, the windowing, the fact that they can spend a little bit of P&A and MG up front, but they'd have multiple windows from which to get their investment back, right? The traditional home video, physical rentals, the traditional pay TV, right? When you can watch an HBO, Showtime, whatever it was, that you were watching it before it came out on then free TV, right? And this cycle could go on endlessly with licensing. We became dependent on the streamers. The streamers then took advantage of the pandemic and shrunk that window of theatrical down to virtually nothing, right? Sometimes day and date, sometimes 17 days. And the consumers all became very happy with that and said, why do I need to go spend money in the movies? I can just wait for it to come out on this sunk cost for me that I already pay for, right? So you bring all of that full circle to the foreign sales, and this window has been contracted, and now you have that coupled with the streamers pulling back and saying, it was great to go try and get as many subscribers as we could, but now we've captured as much market as we think we can. So now we need to focus on profitability. We're not buying anymore. And that's in my opinion, the state that we're in the market. And what we're trying to do now is shift from what probably was too much quantity and back to quality, so that our foreign and so that the whole ecosystem can be healthy.
So that's good then, in a sense, right? I guess.
It's hopefully more of a correction than a retraction.
And that's also why we're coming back to the indie model, right? That's where we're coming back to. We're trying to make these movies on the foreign sales, the equity, the gap, the tax credits, and then our packages need to be a lot stronger, right, to compete for those dollars and those companies.
So can we talk about what makes a package strong? And you mentioned, budget is important, but are there, it starts with a script and an idea and then director cast, but what kinds of, genre, what works best and what should filmmakers focus on? Any advice as to what kinds of projects they should bring and hope to sell?
Yes, certainly. I mean, quite a sort of broad terminology, simplistically, we internally often talk about the 3 C's when evaluating a project towards a market. You've got cast, clarity, and certainty. And, you can't have perfect on everything, but you try to make as much as possible. And that's cast appropriate to what the film is, or trying to be. If it is a horror movie, arguably less important. If it is if it's a action thriller, then very important. If it's a drama, depends completely how you structure it. And then the same with the clarity of genre, knowing exactly what it is. And it's fine, if I know there's a lot of talk always about drama being so difficult, which it clearly remains so. but having absolute clarity, if you're going to do it, that we are making a drama and this is where it sits and this is its audience, and then building it correspondingly. We have a film called H is for Hawk, which we launched in Berlin, which is a beautiful movie. And it's all come together with a whole mix of partners as from the list we just described above. So it very much is possible, and there was always that complete clarity on what it was. And I think the certainty comes where from a buyer's perspective, if they're going to commit to whatever percentage of foreign sales, they're essentially putting their money down and saying, this is going to be on our slate in 18 months or 24 months. So they need to know that that money is allocated, it's going to be used. So anything you can do to bring certainty, and that's where the structuring comes. As Paul was saying, it's about being clever about it, and I think that's where really trying to work your incentives, whether it's competitive state to state from a domestic side or European co-productions, and willing to really look at everything in the round and utilize different partners. Because if you can get the budgets that work, it could be the same $10 million budget, but if it's netting down to 5, it's very different even than a 10 that you only get 20% on and nets to 8. So it becomes such a part of the alchemy as well as all the other elements.
Yeah. So the foreign sales are one element, and the tax credits and incentives are really the other important element. So Paul and I had talked about Australia, and Miguel mentioned Malta, and then the UK has great is really sweetened the pot. California also will, hopefully, and Georgia, Canada, in the States, New Mexico, Kentucky, New Jersey. There's just a lot of places, and seems to be a really positive story right now, that there are more states and more incentives. So,
and it's more important than ever that you find the best place to shoot the movie. I mean, for us as producers, we start with the material, the filmmaker. We're very conscious of not trying to put a square peg in a round hole. But when you come to the financing for the project, so we've actually created the package. Financing, sometimes you have to pivot. I mean, the UK is a great example. They have the new 40% tax credit. That's very exciting because the UK has a huge talent pool. It really is one of the best in the world. Now they're coupling that with a 40% tax credit. They have an incredible infrastructure. So, for us, it's a real option. Australia also has that, but it's very far. And so a lot of people don't necessarily want to go, although the studios take a lot of their TV shows and bigger movies down there and take advantage of that offering down there. And then a lot of you can get this location incentive and still make an American movie, but you can have a post and visual effects partner and get 30% down in Australia. So you could still do an American movie, but have the post partner, and now with digital, it all works in terms of post. So it's that tax credit piece is extremely important for the budget.
It's improving, right? There are more options, right, all the time.
And the beauty of it, obviously, is if you spend more, you get more. So it takes a little bit of the pressure off of what's otherwise a contracting part of the equation on what the distribution rights might sell for.
If you were staying here, what states would you look at?
Well, we have a movie that is hopefully going. We're just putting the final piece together in Kentucky. We're doing something in New Mexico next year, and that's because the project actually fits there. The material, the filmmaker, everything about it. It's very American, based on a book, iconic American book. So it needs to shoot in the United States and in a place with that type of period Western feel. So we're looking, but California now has, there's talk that Newsom is going to increase the cap, to $750 million. But it's also it's kind of expensive with the unions and everything to shoot in the United States. So the last few films we've shot offshore.
Same. And I would say, the benefit of California when we have assembled movies that we film here, or sorry, I'm thinking we're in Santa Monica, we're in Las Vegas. The benefit of filming in California is occasionally you can outsize your talent by letting them go home at night. So if you have a piece of talent, an actor, a director, your producing team that has a family, a young family occasionally, and they'd rather be home at night, they might take a movie for less than what they're otherwise willing to work for if you can stay at home. So while you might not get as much on the tax credit, or you might pay a bit more in your crew costs being in Los Angeles, you might get a piece of talent that means that the distribution rights all of a sudden are worth a heck of a lot more.
Cool.
Really good point. It's a very good point.
Yeah, no, absolutely. And also, the thing to add to that, from if you're going across the Atlantic and you start, or Pacific, but you're going down under or to Europe or wherever, is that there are, in addition to kind of automatic production incentives, depending on the elements of your production and your co-producing partner, there is opportunity as well from a co-production structure. It can help you get, and sometimes it's a prerequisite, local rights, which, potentially will be done through your sales partner, but also might come from strong relationships with the local producer, or which can add into your finance plan. And then also selective investment funds. And every different country or region has different rules, parameters, ambitions for it. Some on maybe the sort of, on one end, it perhaps is purely cultural, which may make it tougher to access unless you happen to be having the creative partners and elements already from that country, so it matches it. And then on the other end, you have the selective funds that are really predominantly leaning towards incentivizing more production. So it's kind of a bit about what you spend and, encouraging your presence or to do more. And that's something that we at Protagonist do a huge amount of, partnering up and matchmaking through a network of producers or through local distributors. That's the advantage of having such an international network. But from, trying to get the most on screen and, accounting for all the issues we've highlighted thus far, that's another thing. Can you get, it could be $250K for something to do for post-production, or it could be a significant, $1 million sitting in a soft position or something from a kind of, $5 to $10 million film. So it really is worth, exploring and talking. And for, if that fear, that seems very long way away across the water for any US-based producers, all of these European festivals have great co-production markets and really have a wonderful infrastructure for networking and meeting, like-minded creative people, but then also opportunities.
Yeah.
Yeah, I think just touching on the point of collaboration, I think that's a really good point, because as a producer, we are always collaborating, partnering, finding other people to help us with our productions. Even a legacy company of 40 years, which we are, we do that. And therefore, you see on all these indie movies now, multiple executive producers. And the reason for that is that, you've brought lots of people in to do different things.
It takes a village.
It takes a village. And, on the equity side, there's lots of people brokering those deals. They want EP credits, and you've got your director and that person's producer. They get EP credits. The sales company's getting EP credits. Everybody's. So that's why you're seeing, if you ever wonder, why are there 20 or 30 on Long Legs recently? It was, 30 EPs? So that's why that's going on.
So, just Long Legs, just to, horror is so hot, and you had Long Legs and Talk to Me, and you just, Terrifier just kind of hits. Also a lot that don't go anywhere, but I mean, what kind of, what kind of movies would you, people follow their passions, and that's what filmmakers do, and they should do that. But if they were looking at a commercial project that they could sell, I don't know, where would you maybe steer them a little bit? If
I'd go back to what George said earlier. I mean, you want a package that is widely appealing, if you can have it be, right? Without, while still following your passion, while still being true to your vision, but ultimately, a project that works maybe for a U.S. audience only, you won't be able to finance through the traditional independent finance pre-sale model, right? What we look for at AGC, we get maybe 500 scripts or projects a year. That's on the film side, right? We get more on our scripted television side. We have unscripted projects. And what we look for is which projects have value, not only for one market, for one audience, but can appeal broadly, right? Why? Because we're going to go out to a market like this one and meet with buyers from all over the world and say, okay, well, does this story have meaning for your audience, right? And oftentimes they'll say, well, who's the actor, right? And who's the director? And so the story should have some appeal so that when you ask yourself the question, who's going to direct this? It's not who I want to direct this. It's if I ask that person, is this the movie they want to make? They'd say yes, right? So is it a director-friendly script? Is it something that tells a story in a meaningful way, right? And then when you think about the rest of the package with the actors, you think, oh, I'd like to see name your A-list in this role, but is the role written in such a way that it's actually going to let them reach peaks of acting that they haven't done yet in their career? So I'm going off a little bit on a tangent, but it's to say that, horror works because it translates everywhere, right, around the world, right? It doesn't need to be a very specific type of social sort of specificity, right? Comedy sometimes doesn't for the same reason, right? Because what's funny here might not be funny in another English-speaking country, as an example.
and horror can cost less, I guess, and you don't need top, A-list stars all the time, right, to make it work.
Usually you can scare people no matter who it is.
Okay, so everyone should make horror films if they can, right?
Jason Blum made a very good business out of it.
That's right.
Okay, so, and then I think I'm hearing, so things can work horror, but whatever genre you're in, comedy may be difficult, but the budget has to be right? If it's affordable, but if there's not this,
Right.
Yeah.
And affordable is not 1 million or 5 million or 10 million or 15 million, right? It's all about that package and what it's worth, right? So the start of the formula is, okay, well, how much is it worth? And that's a very difficult question for the average producer to answer, right? So you come to companies like ourselves, like Protagonist, and, we put estimates together, but we might at the door say this is not something that translates, right? From one country to another, to have worldwide appeal. That to me is the very start, right? And then from there, you move into each one of these different steps.
I'm just curious, of the 500 scripts or so that you see, how do they break out very generally, like in general?
I'd have to get my head of acquisitions up here. I don't even know. Yeah, the ones I see, the ones that we end up financing, we've got a crime thriller last year based on funnily enough, two of our hits from Toronto last year that we sold, Hitman and Woman of the Hour, were both based on true stories. They both had crime elements. I think that's just en vogue at the moment. And so there's a little bit of that as well as what does the world want to see at the moment. We've done horror here and there, largely because of the cost that it can be made for. But, we also see a lot of action that used to work. There used to be a almost paint by numbers formula with action. If you can get a certain star or two to say yes to a paycheck. But it's quite broad. The dramas are a little bit tougher because, what you're asking yourself as you evaluate these scripts is take yourself out of being in the film industry. Try to imagine, you're in middle America or wherever you are. I have however many hours I have this weekend with my family to go to concerts, to go to sports. Am I excited to take 2 hours out of my weekend to go watch this in a theater? Right? Even if you're making it for a streamer, that's the question you should be asking yourself.
Okay. And yeah, George, what are you seeing in the projects that come across your desk?
I think like Miguel, we see such an array of, everything. And, I think one of the tweaks of the marketplace that has shifted, to give an example, is, yes, there's a lot of horror about, but that sort of elevated horror space that was so huge for kind of, late teens into the first few years of the 20s, that's really shifted now, where it's just got to be, for now, straight horror. It's got to be scary, not in the elevator.
elevated.
Not in the elevator. I mean, not going to be a smart concept or whatever. And that's not a reflection on the quality, but it's just got to go there and be clear.
Yeah, on the horror side, we found that we had a very high concept horror that we were packaging and putting together, and it hasn't been that easy to sell. It wasn't and it's not a huge budget, and it had some cast attached, but it wasn't that exactly what the buyer wants, straight up, talk to me horror. It had a cheeky, campy side to it, and that is not flying. So it's really interesting on what is working even in that space.
Interesting.
Right? It's not every horror movie is going to get up.
And so, what do you think? I know every picture is different, and there's many things to consider. But what is the sweet spot right now, with maybe budgets having gone down for a horror film, 10, 15, 8, 5? I don't know.
I mean, for what we're seeing is it really needs to be in the 5.
Okay.
Under 5. I don't know, would you guys agree? I mean, it's not 10.
And that's really hard to do if you have cast, right? And so that's why horror works,
Yeah.
right? At that number, right? That 5, 6, really difficult to do in the United States as well, right? Anywhere that's union. And, for the most part, you're working union. Even if you want someone that, most people would consider a TV actor, right? Someone on the poster, someone that's recognizable. That means SAG's involved probably. You're going to have a WGA script, a DGA director. And, if you're working in a union state, it costs what it costs, right? Even if you can make it in 18 days.
Mm-hmm. And we actually haven't mentioned Canada in all of this, because we've got Canada, which has been a very, very, attractive place to shoot because of its proximity, as well as the rebates there and some of if you can make it a Canadian film, the government support.
Okay. And sorry. Go.
We have to say, yeah, definitely for Canada, and we've done lots of Canadian co-pros and had a great experience from with them and the national bodies. Great crews, great producers, great distributors, and it pairs very well with Europe in a formal co-pro. So we're literally just in shooting now with a UK Canada co-pro, which is taking advantage of both the new UK tax credit, but also has telefilm investment and the Canadian incentives, and so that's paired well. And we just did a German Canadian as well. So yeah, really, I mean, it's to have such a open co-pro country just north of the border for from a US perspective is a real advantage. So yeah.
So what you guys are hearing over and over and over and over again, right, is unless you're massively over-delivering on something that makes the rights worth a lot of money, maybe that's a piece of talent that's doing it way below what they cost, you cannot ignore what your net budget is going to be. You cannot ignore what kind of incentives you're getting.
I'm just jumping, but you talk about Saudi, the Middle East, I guess, as a...
Yeah, Middle East has been up and coming as, trying to attract both Hollywood, major studios, and the independents to come film there. And they are offering a very attractive set of incentives from Saudi Arabia to Abu Dhabi that just announced something at MIPCOM. And so the challenges that we've seen with Saudi is, typically they deal with studios or major studios that don't necessarily need to have the structure of an independent film. So we have a bond company, right, a completion guarantor on the majority of our projects, right? And they're there as an insurer to protect the bank on a project where maybe the producer loses control of the budget for one reason or another, right? It might not be through an experience. It might be some kind of event that occurred. You might not be able to make the days that you had on the page, and you're hitting overtime every single day, right? And all of a sudden, you're 10% over your budget, right? The completion guarantor is there to make sure everything gets finished. The distributors get what they paid for. The bank the bank gets repaid, right? And so, but that structure has some very legal elements to it that don't necessarily lend themselves to what Saudi Arabia currently has in their law structure, right? Abu Dhabi, the UAE are a little bit more westernized. I'm excited to see what they can put together, and whether that's a little bit more user-friendly straight out of the gate. But I know that they're all working. You know, we tried to launch. We're involved in a very big Saudi Arabian movie that was financed by NBC, which is a big Saudi company. So that's a different proposition when you're working with a studio within the country. We went to go finance something, and we found it challenging for all the reasons I mentioned.
And we're sort of in the same boat, but still in development. We have a large collaboration with a Saudi Arabian group. We've been in development now on that project, which is actually a Saudi. The material is coming from them. It's a story they want to tell, but they came to us as a Hollywood production company to help them shape it and produce it. So we've been working with them on that for nearly 2 years, and the idea is to shoot it in Saudi Arabia, to take advantage of the 40% that's coming from there, to get other private investment which is available. And so we're still in early stages. I mean, I'm talking to Miguel about his experience because he's a lot further than us. But yeah, they are active, looking, trying to open up the market. They have this, Vision 2030, which is all about being less oil dependent and opening up industries, including the entertainment industry. So it's a big thing for them.
Curious, when buyers are considering a film, I mean, box office has changed a lot since COVID, and how much does that factor in what they're willing to pay?
I think, unfortunately, the independent film financing structure is so mature that buyers typically ask, what does it cost you, before they even tell you what they're willing to pay. In other words, you know, there's the good old days, and, you know, it used to work a little bit more like this in television as well, where you would actually ask, what is this worth to you? If I give you 90 minutes, you know, if it's theatrical, if it has 2,000 screens on a film, you know, on a TV show, if it can go prime time, what's that slot worth? And now it's more and more becoming hey, we're very focused on our bottom line, so tell me what it costs, and I'll tell you what percentage of your budget we can pay. You know, but that's the world that we live in, and that's how we adapt our models, and that's why these incentives are becoming more and more valuable.
Yeah, for sure. And I think, yeah, to a degree as well with the distributors, I mean, they are responsible for releasing the film, and that's sort of the talent and their brand name. But you also, in some ways, you see them as, you know, they're finance partners if they're pre-buying. You know, they're stakeholders in the movie. And so, you know, maybe less of a traditional just about selling and markets. It's more like it's finding people who share the dream and want to be a stakeholder.
I mean, it's so interesting what's happening in the theatrical market now, because you look at last weekend, we had the Tom Hanks, Robin Wright movie. It tanked. Big cast. We had Borderlands a few weeks ago. Big cast. It tanked. But then we had This Ends With Us, the Colleen Hoover, and it just killed it, right? I mean, who knows? I mean, it's that old adage, who knows? I mean, I love that it's about clarity, certainty, you know. And yes, we go into it like that, but as a production company, we have a very eclectic slate. We could use a lot more of that. It really is.
And Paula, can you talk about this very innovative thing that you have done recently with Republic? Because that's
So, you know, we've always been interested in finding innovative ways to finance, because as a production company, you need to do that. So development is a very big deal for us. We develop all of our own projects, and it can be very, very costly. and we also have a brand of cult classics. So we partnered up with a public platform in New York called Republic.com, and we decided to test the market with a development slate. And it's kind of first of its kind in that it's a slate crowd equity funding. We launched it like 6 weeks ago. Our target was like 1.5 million. We've raised it already. I think we're going to exceed it. We'll, out of that, we'll try to make, develop like 6 films, something like that. And, investors can invest anything from $200 to $1 million. I mean, it's giving access to the audience that we want to come and see our films. So we're actually looking at the audience situation now and going, oh, okay, we want to connect with our audiences, build our brand, build our community, let them be part of our process. So they're coming in. We're lifting the curtain and bringing in the $200, $500 investor. It's managed by the platform. I know Miguel's looking at me going, oh my God, you can't manage all those investors. And of course we can't. That's what we pay the platform to do. But it's actually been quite innovative and successful. And that's something that Pressman Film prides itself in. Our founder, Ed Pressman, who actually passed a year and a half ago, he was always very innovative. I mean, he's the guy that turned up at the Cannes Film Festival 40 years ago with a poster of The Hand, the Oliver Stone film, a poster and an idea, and got the whole thing financed in that festival and came home and made the film, right? I mean, it's about, that was maybe 45 years ago.
And it was Republic's first partnership, right, with, I think, with a
So
theatrical.
it wasn't their first partnership with a film company. They've done they've done corporate raises for they did a corporate raise for the Walking Dead guys, Skybound, but it's their first foray with a development slate.
The development slate. Okay. Interesting.
I'd say the very interesting part as well to me in compiling movies of what you just said is that you're actually asking not what platform can I see this on when you're packaging these things, but who is my audience and what do they want? Yeah. I think that often gets overlooked when producers are putting together packages and saying, but I can see this on Netflix. I can see Netflix buying this. I can see Amazon buying this. And, we're not asking that further question, which is for who or for whom? Yeah, right? Which segment of their audience wants to see this? How big is that segment? And even if that's something that they bought in boatloads in 2020 when they thought that everyone was going to be at home forever and subscribe to every platform, is it what they're buying today?
Yeah, I don't think that's like making films to order on trends is a risky risky approach. I think the amount of times I'm sure you've heard it in you will be told perhaps at one market that it's all about Christmas films from, say, a streaming partner, and you might then turn up, the next market 3 months later with excitement, with all the tinsel and the snow, and then it's like, oh no, we want romantic comedies with the younger folk. We don't care about Christmas. So, you can't really match that specificity because certainly from the streamer side, those appetites wane and change.
And that goes back to Paula's point earlier: is ultimately you're taking your best guess based on what's happening today, but you don't know 18 to 24 months from now, by the time your idea becomes a finished product, what the world is going to be like and how it's going to be received. And sometimes you have surprise hits, and sometimes you have projects that you thought there is no way this is not going to work. And it shocks and awes you when it doesn't.
So it'd be great to take some audience questions, and maybe it's hard to see. There, could you stand up? Thank you.
My question is, you mentioned that buyers would now come to you and say, what are you making it for? To what extent are you able to factor in go-to-market costs around publicity, seed, marketing, that sort of stuff, in addition to the actual production budget?
I'd say it depends on how reasonable those costs are, right? I'd bucket those into development costs like anything else, right? So if I'm picking up a script or a project in turnaround, I'm making a decision on what I'm willing to put into my budget, right? Because that's what I think that the market can bear. So if I see things like polishing or writing a script, if I see things like a writer's room, if I see things that are very, very instrumental, interviewing someone, right, that was part of a story, those things I think all day, up to a limit, but that limit is more about what the total cost of the project is. But things like meals and travel, and I went to go see another producer to talk about it, those are the kinds of things that generally, get kicked back.
So I think this articulate myself correct and just clarify my question. I meant more, if you're going to hire a publicist, engage someone to help you create some sort of buzz and on-ramp, which is going to help that film actually reach the audience you intended to. We hide that so that we don't, trip into the next tier for union when we're making the films, right?
No one heard you say that.
But if the buyer is actually saying that, that's a real part of the cost of making the film, getting it to the actual audience. So to what extent are you able to, not fudge the numbers, but include that side of the actual go-to-market cost in your estimate when you speak to them?
If it's all legitimate costs and it's all up front, it's all been incurred, it's just about whether that's reasonable, whether they feel like that was something that benefited the film, right?
Cool, thank you.
Going back to, you're talking about filming in California.
Can you please use the mic?
Okay, I'm sorry. Going back to filming in California, obviously you talked about the unions and all. What about filming on locations? Let's say in the Sierra foothills, using a mix of union and non-union. Is that possible for independent films? Or is this a problem where as soon as you hire a director, they expect you to hire everybody else along with their deals, or have a mixture of union and non-union working? I was just wondering if there's a possibility there.
In my experience, if any portion of your project is union, and you're filming anywhere where you're wanting to film non-union, it's going to be very challenging. It might be easier if you're filming something sort of guerrilla style where you're not, working with a known production company that signs with the guilds. We have agreements with the IA, we have agreements with all of the 3 talent unions. And so when AGC goes to produce something and starts to hire people, even if it's for 2 days of outdoors, right, to get the specific scenery that we want, it will be found out. And so we typically err on the side of, let's just make it union, right? We know what the cost is going to be, because if we don't, we may have a picket line, or we may have workers that don't show up, right? And so we don't try to do non-union when we know we're doing a union show.
Even if it's outside of the production hubs of the state?
It's just a risk, right? It's just a risk.
I'm coming.
Can you speak to, hi, I'm Natalie. Can you speak to documentary filmmaking and the differences in financing documentaries versus regular?
I can do a little bit on that because we've actually just made a documentary. It's actually a hybrid fiction and documentary elements. But for that, we made it with Danish co-producers. That's actually going to be opening night at IDFA. It's a lower budget, very exciting project, quite unique. It was a similar experience for us in terms of what we needed to do to be, to pull it together. So I most probably, am I answering? I don't think I'm answering a question.
I guess for distributors, right? Distributors they want to acquire something that will have a good return on investment. So in terms of looking at the financial aspects of creating documentaries, what are the elements that go into making a really good documentary that's appealing to distributors from the financial point of view?
I would say, look, at the moment, there's a bit of a problem with documentaries, which is that they've been oversaturated on the platforms. There was a time, I have to take it back to maybe Fahrenheit 9/11, where a good documentary can do amazing box office, right? It was considered a competitor to a feature film, right? A fiction feature film, right? Now, I think if you go on Netflix or Amazon, Hulu, you can go search, and the number of documentaries that you can find it's almost become commoditized, unfortunately, right? I hope the pendulum swings back because these are good stories that need to be told. But what we've found recently, and we've put money into, projects that we co-finance with CNN and companies like that, where we've just barely eked by to make our money back because the theatrical component is no longer there. And again, audiences are able to find this in droves, and the buyers are all, the price gets driven by what Netflix or the big streamers are willing to pay. That doesn't mean you can't get them done, but what I would say is try to get a commitment from a worldwide platform or buyer up front, and don't take the risk of cash flowing and potentially be left holding the bag.
Just on the financing plan for ours, we didn't pre-sell it. We got a lot of soft money, maybe 50%, 60% soft money. We raised some equity. I mean, we used the indie model. We then got a sales agent who's selling it here. Once it got accepted to a pretty prestigious documentary film festival. So we had to go the festival route to try to sell it. It doesn't have a domestic, so it's going to go that way for it to find its audience.
Sorry, I had low expectations of being picked. So sorry about that. Sorry. Thank you guys for being here. Thank you. I have a question, actually, it's a two-part question. To what extent, in your experience, have you had, the first question, to what extent in your experience have you had situations where you've sort of sold a lot of the territories worldwide to finance a film, and then the streamers come in and perhaps offer something that's too good to pass up, and then you sort of have to go back and maybe, trigger some kind of backstop structure to get that going? Yeah, that's the first part of the question.
We try very, 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 very hard not to do that. The ecosystem that we all live in is too important, right? And more likely than not, you're not getting that offer that's too good to be true. It has happened. Apple is notoriously known for only buying a project if they get worldwide rights, right? And everyone wants to be in business with Apple. They have a ton of money. It's a very prestigious platform to be on. And so I'm not going to say that it's not something we would do, but we would try to compensate our distributors accordingly, either with, ensuring that they have the first opportunity and another big project. It doesn't all necessarily have to be cash, but it is something that, they suffered through quite a bit without a streamer coming in during the pandemic when films couldn't get made for different reasons. And they have real budgets and real businesses that they're running where they're allocating funds. And when these things fall apart and they've got a slot, it's damaging, right? And if we're all talking about how to finance a film and, it's degrading because of the contraction in the market and the budgets, we're trying to protect the ecosystem as well.
Yeah, so just on that, I think very well put, and absolutely, I think, see the distributors who come in early, they are partners and stakeholders with filmmakers, and I think this has been the challenge for financiers and producers who, still very much want that attempt at something worldwide and holding it back. But if you go that route, you can land. And we're in Vegas. You can land on black and triple your winnings, but you could equally see it all get scraped off. So I think being conscious of valuing the partners, maintaining the ecosystem is absolutely crucial.
And not to go further on in this question, but one exception to that might be if you've sold a film on the basis that there's going to be a 2,000 screen release in the U.S. as an example, and no one is willing to commit a 2,000 screen release, and you end up with a streaming platform. you may go back to your distributors and say, do you want it anyway? Would you like to take it for maybe a slight discount? Would you like for me to try to negotiate with my US streamer for you to sell your rights to them in your territory? So there are exceptions to the rule, whereas I think the mythical too big of a number to turn down doesn't come so often, but there are real situations where this might be something to discuss and consider.
Oh, thank you. I'm sorry, just to add to that, instead of the two-part question. Okay, I'll ask you guys later. Okay.
Maybe in the back.
Where am I going?
Oh, no. Yeah.
This person?
Oh, I thought it was.
Where am I going?
There was a gentleman right behind you.
I think the gentleman that was standing was correct.
Yeah, exactly.
Thank you. I appreciate that. And thank you so much for this morning. My question's really brief. You mentioned the 3 C's as far as what you're looking into our project when producers come to you, and that was very helpful. I'm curious, as far as the first C being cast, how much weight does that have? And then when you're in the process of greenlighting, do you go and look for projections for that specific cast? And is there certain ways that independent producers can also kind of do their own projections, or at least get that information when they're trying to strategize and develop their project?
Is that for me as a producer?
Yeah, I mean, yeah, I think for the cast, but there's a perennial cast question is it's always vital. It's also important, but again, I think as we were touching on before, it really does depend on the genre. It depends on the ambition and the corresponding budget and requirement of what level of cast you might need if you are looking to rely on pre-sales and all of the above. In terms of analysis, I think yes. I think it's good for all from a mentality sake for producers to find out what interesting cast is coming, what's up next. Will the time lapse and come over? By the time that you're shooting yours, maybe a huge TV show or another film that's got good buzz or traction, and you're lucky enough to have a great piece of talent come to the market just when they're, exploding. So being conscious of what is going around, what's happening, what's going up. It's definitely something that can be done. And then from the sales side, we can always, give honest evaluations on where their kind of current international, world standing in the US. I think there was time about sort of 3-4 years ago where almost there was always corresponding names, but you could almost have cast that might work for a sort of fully financed or setting up at a studio or a streamer, and then cast that would, or a level that would work for international. And a lot of the times, some of those more, say, like names on the rise, up the front, doing something that would work better for the equity or the streamers, but then would be more challenging with less of a profile for international. Now it feels that those lists have sort of really merged much more into a sort of singular fatter list. So just being conscious and cognitive of who you're picking and what they have coming up, what they're doing, and then being very honest about where they sit value-wise. Key.
So I think we're out of time. Thank you all so much. It was, they're terrific. Yeah.